So something that's very clear in the year 2020, especially after all this COVID lockdown and stuff is happening, is how many people are getting interested and wanting to learn more about the investing kind of theme and the market and everything about it, which is great. It's something that I was really interested in probably 2 years or a year before this COVID stuff happened, and now it's just really bringing it to light. I think everyone knows the story of how 2008 went, and many, many millionaires were made in that time by buying undervalued property and the stock market bounce. And as a whole, as a society, as a world, I think it's really cool to see that we're all kind of gaining some more awareness, information, and I guess in a way just getting more intelligent about financial gain and how to be smart with money and not blow it, and how to multiply it and how to make more from it. So it's really cool. And in this video, I want to show you what I learned over the time and what I did before this, and how I've actually grown my portfolio. It's pretty simple, but 25%. And before COVID, it was at 40% gain over a 12-month period. That's incredible money. Like, that is insane. COVID did crash it down. It went down to 20 or under, but now it's back to 25 or so. So, still really good. Shows that even in a recession, that investing is still something that's not as scary as some people like to say it is. I don't know why there's such a problematic approach to it. Like, you say to anyone of the older generation, like, investing, they're like, oh, can't you lose everything though? Like, yeah, you can, but you can lose it all in the bank as well, really. Like, banks, what do you think happens when you give the bank your money? They don't keep it there ready and dust it off, ready for you to come and pick it up. No, they grab it, they go, thank you very much, we're going to invest it and we're going to turn it into more. You just helped us grow the business. So investing is a very smart thing to do, because in a way you're just, I don't know, you're just not getting manipulated in a way. I don't know, to me it's just something that I think everyone should tinker with, and I think you'll find a lot of benefit from it in the long term. I mean, if you've bought a Tats Lotto ticket in your life or bet on a horse or something, then you really should be investing in the stock market. I think it's just a much more long-term beneficial kind of thing, as well as it's relatively safe. Okay, so if you are new to investing, a lot of people will come to YouTube and ask questions. Oh, is buying airlines a good buy right now? Is buying Carnival cruise ships a good buy now because I want to hit the bounce? I would seriously consider staying away from just buying a single stock. Okay, what you want to do, and you hear the word go around, is diversified portfolio. Now, does this mean buying Japanese stocks and businesses all around the world, like diversifying that much? No, you don't have to go that extreme, but what I would really recommend, and the first thing I ever did, and the one that's grown the most for me, is buy into an index fund. So personally, and I'll mention the name just because it's done that well, but I'm not in any way backed by them. They don't know who I am at all. I just use their service. But this superannuation business called Spaceship launched their own app, and their idea was to bring investing to simplify it and make it accessible to everyone, is the way they do it. So they have two portfolios, and this leads us into kind of the whole idea. Vanguard does many portfolios as well, and so does BlackRock if you're in Australian market, like I am here in Adelaide, Australia. Either way, you want to find an index fund. Now, I can link some down in the description for you guys below if you know nothing about index fund, as well as a little bit of information about what they are. But pretty much, it's a gathered lump of businesses. Sometimes they have genres, so sometimes it might be mining businesses, technology businesses, whatever it may be. But you really want to get one that's diversified and maybe even follows the S&P 500, because that in history has always grown. So whether it's from inflation or whatever, chances are you're not going to really lose any money. But I mean, we can't say that, because the US could have a crater and sink to the bottom of the ocean tomorrow, and then definitely you'd lose money if you invested in American businesses. But if you really think that's going to happen, then you've got a lot more to worry about, because there's more chances of worse things happening in the world. And then money wouldn't probably matter anyway. So index portfolios. There's two that this particular one that I use do. they have just a standard top 200 businesses, but they also have the hand-picked 100. So it incorporates a lot of these blue chip big companies from the top 200 and the biggest global companies, but they also handpick a few and manipulate the percentage of which ones they have more investing into based on their idea of where the world is going, and that's why it has so much return to it. But Vanguard and also all these other ones have the same idea. They'll have the growth portfolio. They have VOO, I think is the ticker symbol for their S&P 500 follower. I'm not exactly sure. They have so many listed. But either way, get some money, invest into an index portfolio that's quite broad. Just follows the top couple hundred companies or whatever it may be. I'm personally invested into the universe portfolio, the top 100 that this particular business believes is where the world is going, as well as the biggest companies already. And it's shown really, really good volume. So if you're in Australia, then definitely use Spaceship or Raise or one of these small continuous investing platforms. Raise has a system where you buy a coffee with the app and do the card or something. I've never used it. And if it's $5.50, it'll round up to the nearest dollar, and every purchase you make goes into the business. So it's a really very organic way to build up that investing, even though it's even like $1 or 50 cents at a time. Whereas the one I use is just a complete debit. Every time I get paid, my debits come in from my personal training clients and things, then the money will go straight in every week, every single week, no matter what, into the fund, and it grows from there. So you don't even remember seeing or having the money, and you keep checking your account, and it's growing. And not only does the market actually grow, with a lot of these index funds, there'll be a dividend payout, and there's one coming up in July every year for this particular one. So there's going to be extra money that they pay into your account. But please, for long-term growth of your index funds, any dividend payouts, if you don't really need it at that time, invest it back in. And that is the way to create true wealth. Remember, Warren Buffett always promotes long-term investing, and he's grown himself into a $70 or $80 billion mega business at the moment, purely from investing. And people try and tell me, is investing dangerous? Like, not investing is dangerous, okay? So index fund, huge. And then if you're in Robinhood, you can download this app. If you're in Australia, Stake is the one that you can download. They have no fees for buying and selling stocks, which is huge. Please don't get ripped off by banks that charge you $20 a pop. It might be small if you're playing with $10,000, $20,000, $50,000. But remember, the small things really do add up when you get complacent. So don't be manipulated by the banks that hit you with that fee when it's not needed anymore. You have a little bit of delay, which is, how they get around not having fees. It doesn't cost them as much to kind of transaction. I mean, it's like 10-second delay. So unless you're day trading to the minute and trying to buy and sell stocks, which is very advanced, and I don't recommend that, then you can also download Stake or Robinhood, getting to the point, to buy and sell individual stocks. So this is the point where I'd recommend that you buy individual. And if you want to go for the airlines, you want to buy Carnival cruise ships, you feel like a fishing firm around the corner, word on the street is they've got good business coming. Also, never trade rumors, by the way. But let's say you did believe in that business, really risky investment though, compared to an index fund, then you can do so once you've got your index fund going. So your index fund's going, it's on autopilot, just like mine. Every week you're investing, whether the market's up, whether the market's down, it doesn't matter because it's going to grow over the long term, generally speaking. I mean, you always have to say quotation mark. And then also you get your dividend payout. So it's good growth in the long term. Then with Stake and these other smaller platforms, you can buy and sell individual stocks. So then I like to tinker with Apple right now. Apple was really good. I bought it 278 and it's broken over 300 now over 2 weeks. So that is what I call with swing trading. Okay. So I'd recommend you swing trade from then on if you want to get into like pure investing, like, oh, I want to ride up on this business and cash out in a week or 2 or 3 days, swing trade, though, I think is the best. And try and stay to the blue chip ones because it's a bit safer. You know, just don't trade what your buddy said was going to be the next big one. It's 10 cents now. It's going to go bang $1.50. If you're buying and selling stocks under $1 each in value, then it's super risky. I know one of my clients, of my personal trading clients, put $20,000 into this mining company in Australia. He bought it at 40 cents. Word on the street was it was going to do $1.50. One of his buddies told him, and guess what? Something happened to the business. I'm not exactly sure why. I can't remember. Crashed down. They're at 3 cents per share now. They are at the point where they've pretty much hit liquidation. I don't even know if they've got their doors open. I don't know if they're operating anymore. $20,000 loss. Okay, so over $1 is what I recommend when you want to buy individual stocks. Use a platform like Robinhood if you're in the States, or Stake if you're in Australia, so you're not getting hit with nasty fees all the time. And hopefully this helps you out. Investing is such an exciting thing to do, and you can really make some good money, if not set up a fantastic future for yourself and for your family. But remember, short-term gain will always destroy long-term success. So keep that in mind with any business or investing that you do. Thanks for watching, guys. If you did find any of this information helpful at all, please do hit the thumbs up button. It does help with the algorithm and everything a lot more than you think. And also, I've noticed a lot in my analytics lately that 99% of everyone that watches my channel or any of my videos, you can see all the heavy analytics, have never subscribed to my channel. 1% of anyone that watches these videos is subscribed, and if a video gets some decent views, the number goes even lower. It's like under 1%. So if you want to see anything like this, maybe down the track you want to see another video and you might find it a little bit helpful, then please consider subscribing, and that'll help out my oh yeah, just make me feel good. Okay, so thanks for watching, guys. I'll see you next time.